welcome back to another episode of the Money Mentor podcast. The Chief Economist, Dr. Andrew Wilson at My Housing Market. We've got plenty to go through again today. We'll be running through the data, and it's good to see you again, Doc. How are you?
Look, I'm really good, and I guess we've got our Easter holiday break behind us now. But of course, we're now into school holiday mode. We've already got Brisbane, Queensland and Victoria on holidays, school holidays, and New South Wales, Adelaide and South Australia and Canberra are joining them this week. So a little bit of a distracted market. We always see that. So it's a bit bumpy up and down in terms of when those holidays occur. Of course, we do have Anzac Day coming up in a couple of weeks as well. So April is traditionally the holiday month, and we really have to wait until May until we get a real sense of how the market has performed, moving away from all those ups and downs of holidays. But it has been a very strong start to the year. And as you said, we've got plenty of data today, as usual, to discuss. And importantly, we've got the latest rental report, the March rent report. Sadly, no good news. I guess we're not surprised. It's usually the same old with our rent report, and nothing really different. Maybe we could read a few tea leaves in terms of some emerging trends maybe, but we'll also look at building approvals and home loans and what just did happen last weekend in our auction markets on resumption from the previous weekend's Easter break. And of course, everybody had that Easter break. So shall we get going, Glenn?
Beautiful. Sounds great, Doc.
All right. So My Housing Market, of course, presents all our data, and I'm Chief Economist, as Glenn mentioned, of My Housing Market, and we're all about the current state and future prospects of your housing market. And of course, as we emphasize through infinity, every week we do produce all that current data. So it keeps you in the loop in terms of what's happening, in terms of not just the housing market activity, but the drivers of the housing market as well. So it is the week to Wednesday, April the 10th. Gee, well, this year's just moving ahead. Bang, bang. It's, it's amazing, isn't it? But here we are, the April 10th, the week to April the 10th. And we're going to look at that March rent report. As I mentioned, the latest home building approvals, the latest home loan data, and the latest weekend auction results. So let's have a look at the latest rent report. And no surprise, rent's still rising. It's a disaster area for tenants, that rent market. It's it's not unusual. Well, it's typical to see queues of people waiting outside properties that are advertised for rent in just about all our capital city markets. It's, a very tough gig for those that are looking for a rented property or a rental, and no real sign that that's going to improve. We just are chronically undersupplied in terms of our housing requirements. And of course, at the pointy end of that is the rental market, which of course shifts around a bit more than the permanent market. Let's reach out to those to tenants looking for a property, because they are still doing it tough. So more bad news for tenants over March. There's still tight vacancy rates, generally higher rates for both units and houses over March, and that does remain a nightmare environment for tenants seeking accommodation. Let's have a look at the data in terms of what came out. We had a mixed result, as we typically see with our rent results for houses. Perth up 2.3%, the strongest performer over the month. Brisbane up 1.6%. That Brisbane market certainly has continued to tighten over the past year. We know that southeast Queensland has been fertilised, if I could say that, over the past couple of years with all that migration coming out of the southern states through COVID. And that market is continuing to be very strong in terms of rent growth and prices growth. Sydney was level, flat rents for Sydney over the month, but still at the highest of all the capitals. Median asking rent in Sydney for a house is $780 a week. That's a lot of capital coming out of your weekly income if you're a house renter in Sydney. Melbourne up just 0.8%. As we mentioned, Perth up 2.3%. But when we look at the annual growth rates, that really tells the story. Annual growth rates with Perth up 15.7%, strongest result over the past year. That's that really is a lot of that, a big increase and a lot to be coming out of what is already an environment with high inflation. As we said, we reach out for the tenants that are having to find that extra money over the year just to secure a roof over their head. Melbourne up 14.3%. That Melbourne rental market is certainly reviving. It has been, I guess, an underperformer, particularly in terms of comparing rents to the other major capitals, Melbourne, but it is starting to catch up with the other capitals, now tracking at the same level as Adelaide. Hobart has the lowest median asking rent over March of $550. But when we look at vacancy rates, Glenn, that tells the whole story. It's just terrible. All vacancy rates, with the exception of Canberra, are under 1%. Let's remember that 2% vacancy rate is sort of a balanced market. The results are basically steady, and they move around from month to month. But when we're tracking it right at the very bottom, as we are with vacancy rates, the movements don't really tell us anything. It's the queues of people looking for rental accommodation that we see typically that tells us that just what a shortage we have of rental property. And as I mentioned, Canberra is the only market at 1%. Everywhere else is below 1%. So no joy there, unfortunately, for in the rental market for houses. Similar story for units. In fact, there was more rises recorded for units over March compared to houses. The top performer there was Sydney, up by 3.4%, bounced back after a couple of lower months to that $750 per week median asking rent. Melbourne up 1.3%, Brisbane up 1.2%, Adelaide up 0.5%, and Perth just shifted backwards slightly by 0.4% over the month. But when we look at those annual results, again, a real horror story there. Melbourne rents and Melbourne unit rents really have been tracking significantly higher over the past 6 months from low levels. And it's sort of caught the same shortage issues or is experiencing the same property shortage issues at the other major capitals. But Melbourne house unit rents up by 17.8% over the year. Brisbane up 16.2%. We mentioned every time we look at this rent report that it wasn't so long ago that we had those self-appointed experts telling us that the Brisbane unit market was chronically oversupplied. Gee whiz, look at that rental increase. And, median rent now in Brisbane of $628, and plenty of demand continuing there for rental accommodation, unit rental accommodation in Brisbane. Perth up 14.9%, Adelaide up 11.2%, and Sydney up 10.7%. So some big numbers there. Vacancy rates are higher, Glenn, for units than they are for houses. We've got a number of the capitals there now tracking over 1%. And when we look at the trend's actually been a little upwards for unit vacancy rates. So maybe just a glimmer of hope of some more supply coming through, or certainly more vacancies for the unit rental market. So, early days, yes, but just some signs there that unit rental market is improving. Let's be very clear, though, that these vacancy rates are still very low, mainly just over 1% or below 1%, which does, again, signify that there's way too much demand and not enough supply in that marketplace. But as I said, maybe we can just hang our hat on the fact that it's looking a little bit better, but we'll need a few months of this to start to have tenants breathing a sigh of relief. But certainly no relief likely this year for tenants generally high and rising rents, tight vacancy rates. And as I said, maybe unit vacancy showing some very early signs of rising from record low levels. But sustained relief is unlikely. We have a chronic housing shortage, still low building approvals. We'll look at that shortly, the latest data, and still high migration. So it's just way too much demand, not enough supply. Same old story, Glenn, I'm afraid, for our rent market now.
Sure is.
We've got lots of sympathy, of course, for tenants in a vexed position. But of course, landlords are doing it much better. They are enjoying, of course, higher rents and all that competition for for their properties. And that means, with more prospective tenants to choose from, that they can sort of look towards more of a quality outcome in terms of the successful tenant, and as we mentioned, higher rents coming through as well. So another month of home building approval data was released. This is for February, and no really good news there. We had some indications perhaps that we'd reached the bottom of what's been a significant decline in home building in Australia, but that's really sort of flattened out a little bit now. In fact, the trend's starting to fall again, the underlying trend. So home building was down again, mainly as a result of that volatile unit market where units come and go. We get big developments coming through from month to month, and then, of course, the following month that we don't get the big development we had the previous month, which means we track backwards significantly. And that's what happened over February. We had units down 24.9% compared to January. Interesting, houses were up by 10.7%. These are building approvals for houses, which came off the back of a 10% fall the previous month. So sort of balanced out, which was a bit of a surprise, that fall in houses the previous month over January, because they tend to be a much steadier data set. As I said, the units are volatile because of the big number of developments that can come through from period to period. But houses bounced back up by 10.7%. And New South Wales was the top performer with building approvals for homes up by 23.4%. But that was on the back of a very big development that came through in Sydney, apartment development that came through in Sydney over the month. So as I said, that's sort of added to the better picture there. But again, it was only New South Wales, with the other states recording falls in unit developments. And the problem is that the big picture, the annual growth trends are still significantly lower than where they were at their peaks. And now the quarterly trend, after looking like, as I said before, it was just started to flatten out a bit, is falling again. So when we talk of the rental market, we need more homes, we need more properties, we need to match supply with demand, but we're not seeing that in the latest data, which is still well below where we need it to be. And you just see there on the trend data that we're starting to fall away again after flattening out. Hopefully we'll get more approvals coming through, but certainly well below our previous peaks. And over the month, as we can see, houses up 10.7%, and units down 24.9%. Totally, that gave us 3.5% fall in total home approvals. The year to date, a little bit volatile still, because we're only 2 months into the year compared to the same period last year. But when we look at the full year compared to the previous year, you can see just how still far behind we are. Just over the past year, we haven't really caught up in any way, even though there's been a lot of focus on improving building outcomes. It's just it's a big wall that we're pushing against, a big barrier, and it's a systemic problem in terms of trying to really improve the number of homes we're getting into the marketplace. And we can see that big fall in the historic trend for capital city housing approvals, down by 38% since 2016. And when we break that down, we can see it's really units that have been the big catalyst for this decline in supply, down by 55% since 2016, and well below that 110,000 trend peak we had in 2016, and now well under 50,000 trend. So that's why we have high rents and so much competition for property. We just really stopped building homes. And as we can see with the latest data, no real relief on the horizon for that. Early days, of course, over the year to date, but Perth is up the strongest so far this year compared to the same period last year. But as I said, we're only looking at the 2-month results this year compared to the first 2 months of last year. And Melbourne's still the top performer in terms of supply for housing. And we typically see Melbourne providing around about 40% of all home approvals for all the capitals. But we saw a big rise in, as I said, Sydney through that big development that came through apartment development in Sydney. So Sydney's picked up quite strongly off the back of that big development. But again, Melbourne leads the charge in terms of supply. And maybe that's one of the reasons why, Melbourne rents have been a little lower and Melbourne prices have been a bit lower as well. Home prices have been a bit lower than the other capitals, not the same growth. And it's only one of the factors. There are other factors. But certainly more supply is what Melbourne does in terms of building approvals. And there's the results of the first 2 months of this year, comparing each of the capital cities. We also had the home loan data coming out, which has been a bit of a mystery lately because we've seen home loans rising. And this is seasonally adjusted data, so it shouldn't really have anything to do with the time of the year. But over the past couple of months, we've seen home loans falling. But now we've seen a bounce back, and this is in the face of what we've seen with house price data and auction results, that it's been a strong start to the year. But home loans bounced back over February, up by 1.4% over the month after those 2 monthly declines, which were, like I said, a little bit problematic. And when we look at the breakdowns, it's been interesting that we've seen first home buyers, despite total home loans falling over the 2 months before February, we saw first home buyers increasing. And I think we discussed that was because of how tough that rental market is, higher prices. It's really motivating first home buyers to get into the market. But we did see all buyer types record increases. Investors were stronger, total owner occupiers were stronger, and first home buyers were up again. We need to take some of this ABS home loan data with a grain of salt. They've been changing some of their methodologies. There's had some issues with seasonal adjustment through the COVID period. But nonetheless, it's more logical to start to see home loans rising again, given how strong the housing market has commenced this year almost across the board. Western Australia was the top performer for home loans over February in terms of the year-to-date data. So Western Australia booming along, but again, early days, and this data is volatile because of that. Those early results. So let's finish off, Glenn, by looking at the weekend auction markets. We've sort of discussed that a little bit already. We returned from the Easter holidays. Of course, there was really nothing that happened over the Easter holidays, because everybody's on holidays. But we always focus on the auction results, those weekend auction results. As you can see there, when we track on our charts, house prices versus clearance rates, it's a very strong relationship. And we can see that now we're looking at the quarterly data. This is the March quarter data, the latest data. You can see how we've seen an uptick in Sydney clearance rates over the March quarter, and you can see how prices have also upticked over that quarter. So a good forward indicator. Keep your eye open for those auction clearance rates data. We'll tell you how to get hold of that in just a sec. Similar story in Melbourne, higher house price growth compared to the December quarter and higher clearance rates. So the latest auction weekend results, more positive results again, following the return from the Easter holiday and despite the distractions of school holidays in Melbourne and Brisbane. And as we mentioned before, school holidays have commenced in Queensland and in New South Wales, South Australia and Canberra now. So they're following on the holidays that have already commenced in Melbourne and Brisbane, but didn't have really a significant effect on the market. So here are the results. Interestingly, of course, last Saturday was Easter, and we just didn't really have any results for Easter that are worth, comparing. But the same year, last year was also Easter. So last weekend the previous weekend was Easter, but the same weekend last year was Easter too. So it's all Easter. So not a lot of comparisons we can make there until we start to settle down, which will happen next week. But Sydney, another big weekend of auctions, nearly 1,000 auctions in Sydney. We've had this real surge in the number of properties being offered for auction this year. And clearance rates have still been very positive, which means we've actually had record auction sales this year for this time of the year. So again, reinforcing what a strong start the housing market has had. Again, in the face of a lot of negative predictions, which tend to always be wrong. So I'm not sure why anybody would pay any attention to them. But a 72% clearance rate, despite in Sydney, And Melbourne, despite holidays, of course, bringing the numbers down, a good number, 700 auctions. Clearance rate similar to what we've seen in recent weekends in Melbourne, 65.9%. Brisbane, 86 auctions, good number of auctions there. Similar again, auction clearance rate in Brisbane compared to previous weekends. And same old story in Adelaide with a clearance rate similar, not at the stratospheric levels we saw with Adelaide last year, but still quite a positive clearance rate there. And Canberra, down a little bit in Canberra compared to what's been a reviving market over recent weekends, back under the 60% mark. So we'll keep our eye on that Canberra market going forward. But as I mentioned, New South Wales, Canberra and New South Wales and South Australia will be heading into school holidays this weekend. So we'll see what sort of an impact that has on the market generally. But we can see there that we've got the data so far for April, which is not representative because of those distractions of holidays, but still tracking pretty well there in Sydney. And just a little lower than where it was in April last year, which of course was the beginning of the really strong period in housing markets. Melbourne a little bit below where it was in April last year, but tracking ahead so far of where it was in March. We're only looking at one weekend results here. So again, we'll need to keep track of this over the following weekends. Brisbane down a little bit on a year ago. The Brisbane market was entering into a strong boom phase into April last year. Unlikely to replicate that, but still strong market and good results there for Brisbane. And Adelaide, as I mentioned, not at those 80% results that we had a year ago, but still a market that's favouring sellers over buyers. And I mentioned Canberra just over the first weekend of April, down a little bit on those 60%ers that we were getting in Canberra over March, which was a really good sign for that Canberra market on the move, on the upswing, reviving. But again, we'll check out what happens over the next few weekends to see if that revival it has been sustained. I've got a QR code up here for our latest weekend auction market report from last weekend. This is the National Auction Market Report, which includes the regional breakdowns for Sydney and Melbourne and all the top auction sales for each of the capital cities from last weekend's results. So that'll take you to a link to that particular report, which is provides a handy real-time insight to what's happening on the ground in terms of the auction market. And if you're looking for those auction results, the Capital City Snapshot's available on my LinkedIn account, Doc Andrew Wilson, every Saturday at around about 6:30. And the full national report, which that QR code reflects, is available around about 9 o'clock Sunday morning. So get a hold of that if you want the latest insights into the housing market. And of course, as we finish off, as usual, we have a plug here for that great My Housing Market Suburb Data app. So if you want to know what's happening on a suburb basis in real time, this is just for you. That's the link there. The QR code will give you a link to that wonderful little app from My Housing Market and Infinity. You do need a password to access the app. That password is available through Infinity. So get onto the folks at Infinity and they will advise you how to get hold of the app. It is a great app. Here's a screenshot from the particular app. It will tell you every suburb in Australia which has data in relation to the rental market and the price market. These are for asking prices and asking rents. And you've got a number of filters there. You can filter for price or rent. You can filter for state or region. You can filter then for suburb. And then the type of property you can filter for, house, unit or townhouse. And also the number of bedrooms, Glen. So that's pretty comprehensive. And you can see there we have a screenshot of, I've selected Blacktown there as our screenshot. And you can see it provides the median price, the high price, the low price, and the number of properties that are actually being listed for sale at the moment. So a good forward indicator of the market, and certainly good for those thinking of selling. Gives them an indication of what the market's doing right at this very minute. And we update this data daily. And the same for rents there for Blacktown. So we've done what we did for prices. We've done that for rents, and that shows you just how that market's tracking in Blacktown with the median rent, the high rent, the low rent, and the number of properties that are listed for rent in Blacktown houses, and not very many, but we shouldn't be surprised at that going forward. So next week, more news coming through. We're going to have a look, Glenn, at we've had the rental data for March. We've had the price data for March. So let's put that all together and show what the latest residential investment returns are. So we'll look at capital growth, gross yields, and total returns for each of the capital city markets. So
very good.
That's a good one for investors to see what those returns are, which markets are offering the best returns, not just for gross yields, but also for total returns, capital gains plus gross yields. We've also got the latest house building costs, which is an important factor, obviously, in improving our building returns, but also for inflation, because that's a significant contributor to inflation. We'll also look at the latest regional house prices. So let's look at what the regions are doing, the major regions in all the states. We'll have a look at what the latest house prices are in the regions and their growth. And as usual, we will look at the latest weekend auction results as our holiday month progresses through. So plenty this week, plenty next week as usual. Everybody get onto the app because that's a great little tool for your decision making or just for interest in what's happening in real time in the property market. And if you want a copy of this report, there is the QR code for the report, Glenn. So we've been quick and lively today, which is good. And we've had plenty of information as usual. And we'll be back in town next Wednesday with all that extra data. So watch out for that. And this is the place to come if you want to find out what's really happening in the housing market on a weekly basis.
Wonderful, Doc. Appreciate your time again.
You have a good week, mate. And I'll see you
Thanks,
again
Doc.
next Wednesday. All right.
Absolutely. You too, Doc.